Hello, welcome to my YouTube channel. I'm very super excited to have every one of you on this coming back to watch my YouTube videos. I see the subscribers growing and I'm super excited. I just started this video honestly just to be able to share my experience and my journey, to be able to just help one or two people next time. Just so amazed to see the comments, the likes, and all of those things, and it just keep encouraging me to do well. If you like what we're doing, please do also subscribe and drop a like and comment and let me know how you feel about every episode we post. Right, so today we post content on business and forex trading generally on this channel. So today I'm super excited to be here again. So I'm here to address a very serious, very fundamental issue. I think it's very important to most people who especially are traders. I see this not just among newbie traders, but even seasoned trader with experiences and who make profit from the market, but their profit are not consistent, right? So I want to be able to share what I've learned in terms of technical analyst. For those of you who know I'm a technical analyst, and I do not in any way try to downplay other people's strategy, like people who are fundamental analysts, sentimental analysts. As long as it gives you money, it's fine. All right. So for those of you who are technical analysts, which I am, I'm just want to explain three fundamental principles that really would help you get profitable and help you get in such a way that you can just look at this chart and you can have an understanding of what it's about. So let's go right into the video. So for those of you who do not know what a technical analyst is, technical analysts are traders that look at historical data to predict future price of the market. So they believe that everything that is going to happen in the market has already happened before. So they use previous data with some technical analyst tool to be able to, do the analysis in the market and to be able to determine what is going to happen, right? So in today's video, or if you are new to trading and you just want to understand how can you constantly look at the chart and make money. So when I learned this thing, it literally changed my technical analyst game. So all markets, whether stock trading, forex, cryptocurrencies, whatever, follows these three core principles. Number one, it's market does not move in a straight line. As a trader, as a technical analyst, for you to be able to understand any chart, you have to first of all get to the point where you understand that market does not move in a straight line, and market does not always move. Market would always move in trends. So what that means is market would create support and resistance, which is number three. So by the end of this short video, you'll be understanding all three and you'll be able to look at the chart with a very completely new perspective. So let's go into it. Number one is market does not move in a straight line. As a technical analyst, you have to understand that market does not move in a straight line. Right? If you look at your chart, you see that even though market has trend, which I'll be coming into, you'll be like, oh, it doesn't move up arbitrarily, right? It moves, it rests, it moves, it rests, it moves, it rests, depending on the direction the market has been trending, right? So the first and foremost important law is that market never moves in a straight line. So the first and most important law is that market moves in waves. So many waves means zigzag form, right? They never move in a single straight line. So a market in a very strong uptrend will not just go up and up, right? It will move up, pull back, then move up, and then pull back, right? So that would help you understand that the market moves in such a way that even though a market is on a trend, you already know that market will always create what generally is called support and resistance, right? Why this happens is because human beings are psychological beings, right? So after a strong move up, right, trader who bought earlier, right, would start to sell or to take their profit. Then the selling pressure, right, would cause the price to like dip, like it's some sort of what we call correction. So once that price has pulled back, new buyers who missed the first position see this would like just come in and just continue moving the price up. So when I understood this, so what it helped me do was, if market is moving on a trend, it helps me to answer the question, where are we currently on this market? So I know that we're in an uptrend, but because market is on an uptrend does not mean I buy from anywhere. I want to be able to notice where key support and resistance level is for me to continue buying, right? So market can be on an uptrend. I say I'm going to continue buying. You don't just buy from anywhere. Those support and resistance level just answers the question. Okay, yes, we are in an uptrend, right? It's a buy market, it's a bullish market, and I want to buy. But you know that market definitely can retest. Most times, have you ever been in a situation when you're on a trade and the trade clearly was the your direction, but it pulled back, hit your stop loss, and continue moving to that direction? Many a times that's what happens to most of you guys. And the reason why this happens to you is because you do not take the time to understand that market doesn't move in a straight line. That it will always create a support, a resistance. It just moves in a way before it goes. So when I understood this, every time I open my chart, I first of all would want to know, okay, we are know the trend and okay, where are we on this trend? So that I will know at what point would be a good and a fair point to buy from. So I don't just enter the market and start buying. Before, when I did not know this, I lost a lot of money because I think that market will always keep going my direction. But I just enter from the wrong place. It's not that my analysis wasn't right, just that my entry was so wrong. Number two is markets would move in a trend, right? So market would always create in a trend. This will wave-like motion lead us directly to low. So the market, this motion is not random, it's organized into trends, right? And there are only three trends in the market. There's only three trends in any financial market, as long as that is the chart. First, we have the uptrend. There's a clear series of higher highs, higher low. The impulses goes like that, higher high, higher lows, right? And then we can have a pullback, stop at the higher price than the last one. Buyers are in control. So it just tells you that when market are creating higher highs, higher lows, higher highs, higher lows, it means it goes up, pull back if it continue creating, breaking the previous higher price, like that, like that, like that. So that you know that the market is an uptrend. Second, the market is also can be on the downtrend. This is the exact opposite, right? It's a series of lower highs and lower low, right? So this they're like impulsive move down, right? And a small relief that feel at a lower price than the last one, right? Then seller in control, then it just creating lower highs, lower low, and lower highs and lower lows, like that, like that, like that, like that. So that's when we say the downtrend. And usually this should be confirmed on a more daily time frame. So now let's get back to it, right? So and the third thing is a ranging market, also known as like a very choppy market. This is a market I will always advise you avoid. Market is neither moving up or moving down, right? It's just moving, jogging within a certain range. So this principle helped me to be able to know key, because there's a wise saying in Forex trading. There's a wise saying in Forex trading that always say, always stick to the trend. When you stick to the trend, it becomes very easy for you to be able to know what the market is going to do, right? So every single day, your job as a technical analyst is to answer the question, am I in an uptrend? Am I in a downtrend? Or am I in a ranging market? So that principle literally changed how I saw the financial market. So anytime I come to the chart, I want to know the trend, because it's just like if you notice, another thing is most times you've lost money. You were either going against the trend. So the market was going on the uptrend and you were selling. What happens? Even though you saw a red candle, does not mean that the market is, maybe it's just that pullback I was teaching you when I was talking about market was in trend. So you understand that, right? So number 5 is market forms support and resistance. Market forms support and resistance, right? So market moves in trend, and what makes them stop and turn, right, is that brings us to the third law that market would always create support and resistance. So support is a price level where buyers pressure is so strong and it stop the price from falling any further from that price, right? Buyers sees the level as a very key level. So support level can be, okay, market is going on uptrend, and the support level can be up, where price has probably rejected at least previously 2 to 3 times. So when maker gets that point, what happens? There's like there's like something that just makes it not to break above that level. It just rests before it continued that journey, right? So Then resistance is like the opposite, a price level where selling pressure is so strong. It stops price from falling any higher or sellers see them as very expensive. So for example, the support level, if it's an uptrend, it will be up. So market will move there. It will just get there, it just stops there. Then on the resistance level, it comes back to resistance level like that, until it breaks it up like that. So market will always create support and resistance every time in the market, right? This level are created by markets because when people, these are places where people put their take profit and stop loss. So you see, that is why it looks like every time price gets to that level, there's always that retention. Um, so I've been able to help you understand these three basic principles. When you understand this, and trust me, you'll be so good at the chart, you become very profitable. I'm not teaching you any strategy, but this is something that has worked for me. This is something I've understand, and it works on every chart. First of all, understanding that market does not move in a straight line. No. So that answers the question, where are we? Where should your entry be? Then the second one is that market would always market has a trend. Either it's uptrend, downtrend, or ranged market. You want to be able to identify that on maybe on a daily time frame or a 4-hour time frame, because the higher the time frame, the higher it tells you the true picture of what is happening in the market. And lastly, I said that what market will always create support and resistance. So it will always move to the nearest support level and retest the nearest resistance level. That's how market just moves like that, like that, like that, like that. So I believe that I've been able to share something very key. And I want you that as you do your analysis, please take note of this important point and take note of them so that way you don't just get into charts and you literally have no idea what is going on or what you're doing. So thank you so much. If you got value from this video, please do well to subscribe to let me know and let me hear your thought and your idea. Thank you so much. See you in subsequent episode.